All right. It's been a while, and I'm starting to see some light at the end of the tunnel for a possible bounce. Short term, probably. Hard to say if this is going to be the bottom of this down move or it's just going to be a dead cat bounce, but we'll find out. Um, so, what I do here is the first thing I want to see is where are we in the market cycle on the overall bigger pictures. So, what I do is I like to look at these indicators, or not really indicators, these are actually charts, but they look like indicators, but they're stacked up one on top of each other. There's four of them here. And let's start with looking at the bottom here. And you could see the name of the chart here. This is the S1TH, S5FI, S5TW, and S5FD. I use TradingView, and so you could find those in TradingView. You may have them in your uh, chart viewer, but in TradingView, that's what these are. So what I have here on the very bottom here, in this case here, these are all S&Ps, and the very bottom one here is the S&P 100, the top 100 stocks, and this is telling me all the how many what percentage of the stocks are above the 200-day average. So that's basically what it's telling me here. And if you look at here, the green here, it says 56.43. That's telling me that 56% of the 100 stocks are above the 200-day moving average, which is close to being half of them here. And I put in this blue line here to represent the 50-day, or excuse me, the 50% line here. We do not want to see it go below that, because then the market now is on a potential correction mode. But as you can see, it's still trading above it at 56% of all the stocks of the 100 is above the 200 moving average. And what I did also is I have a 3-day moving average, which is represented by the red line here, just kind of to see which way the trend is going here. And you can see the red is above the green, so this is kind of a negative. It's sloping downward. uh, we still may be able to get a pullback up to the top, but for now this takes longer to turn around. But the major trend here, it's still positive but kind of weakening as time goes on here. Okay, so now I'm going to go ahead and now move up to the top one here. And in case if you ever try to use this here, normally they come in the candlestick uh, pattern, and I'll show you here. If I put in candlestick, okay, I see. We'll use this one as an example here on the 50-day. Switch that over to candlestick. You can see the candlesticks, and it doesn't really help you as much. So I like to see it in the line form. See, now it makes it clear where the lines are here. And in this case here, 40% of the stocks, in this case the S&P 500, using the 50-day moving average, are under the 50 line here. So that is not good. That means we're losing institutional support. This is normally what the institutional uh, players look at, the 50-day moving average, and you could see we are losing support on here with the red above the green, as you can see here. So this is weakening too. This is not good. We need to see this start pulling up if we want to continue to see the market go higher. And then the midterm here is now based on the 20-day moving average, and the blue line is the 50. And you could see only 34% of the stocks are above the 20-day moving average, which is not that great either. So that's also weakening. Now, short term, as far as for swing trading, where We're looking for moves from 3 to 5 days, maybe a week. Uh, this is the one I like to use, and in this case here, that red line in the center here represents the 50. But I also use this as similar to an indicator. Let me pull that back. And what I like to see is the green line dip below this white line, which is the 30, to start looking to go long. And once it reaches above the 70 or higher, then I start to look for, it seems like the market will be pulling back soon, or slowing down. So this is where we're at here. That's a good sign. That means there's a potential we may be getting a bounce coming in the next couple of days. If you look here, it's been trading sideways for quite a while. There's something not used to seeing very often here. This is very rare. And normally you get a dip here, and then you get the bounce, or the dip, and then the sell off here, and up and down. It pretty much works consistently. But in this case here, ever since January here, 21st, it's been choppy, and it's reflective on, if you look at the market here. Okay, so this is where we're at. So we're looking for a potential bounce coming in. So now the next thing now we're going to go ahead and look at is now the key indices. So let's go over there. Go to the SPYs. And if you look at this here without any indicators or moving averages or anything, you look at it and you can say, wow, it looks choppy, sideways. Now the key thing is, is there further side down, or we're going to get a bounce? Where are we at that? Now the most fundamental thing we can do is put a trend line. If you draw a trend line from the top to the next touch point here, you could see it's obvious that we're on a downtrend here. Until we could close above it and then continue up, then the trend has changed, and there'll be the buyers would be in control. Right now the sellers are in control. So this is the most basic thing one can do. And the next thing then is putting in simple moving averages, and of course using the major trend line, the 200-day moving average. You could see it just touched it right here, and it paused. It now created what we call a doji, or a spinning top. This means indecision, and normally a lot of traders, what they do is they put a trend line on the top of the wick, and then the trend line on the bottom, and then they wait for the close. If it closes above it, then chances are the buyers are now in control. If they close below this, the sellers are still in control. So this is a very basic way of trying to find the direction of the market here. Okay, and the next thing one can do is put the 50-day moving average. In this case, I used the 55. Again, this is for institutional support, and you can see it is trading below it. So we're losing institutional support attention as far as them investing or trying to accumulate more stocks here. When it's trading above it, then they look to enter to accumulate, to push the market up or the particular stock higher. In this case, it is below it. So on the SPY, so most of them are most likely just sitting on their hands and waiting for all of this to settle before accumulating. Now, there is dark pools where they do not show the trades as far as volumes. The dark pools are normally institutionals trading one among the other, and if you're not sure what dark pool volume is, just go ahead and Google that, and you could get more information on that. And they've been accumulating now on this day today, so that could be a good sign that they think this might be the bottom, at least for the short term, and for looking for the bounce. Let's look at the 20, which usually means if the bulls or the bears are in charge. And you can see we're under, so the bears are still in charge. Next thing I would then put is the 5-day moving average, which is more of my swing trade indicator line that I use. And when it closes above it here, this is where I look for short-term swing trade, which here's a good example. And sometimes it just doesn't work out. You got the break above, but we did not get the confirmation, meaning it did not close higher. So it closed back down, so now it just chops around. So we're still below it. We're very close to it though. It's attempting to maybe go over the 5-day moving average here. All right, and then the final thing here is we look at volume, and you can see there's big volume here. It's of course it's red because we did close lower, but that doesn't necessarily is a negative thing here. Now if you dig deep in here and break this into two candles here, 4 hours and 4 hours, you could see that most of the negative volume came from the first half of the day, which is where the retailers are, and the smart money or the smarter money is on the second half of the day, and you could see the volume's a little less, and they been selling off here. So that's how you got that doji from there. Now the next thing I would look at is now the indicators. We got the 14 RSI with a line of right on the 50 mark, and it's below the 50, so it turns red. So that means there's weakness. We like to swing trade above the RSI on the 50 mark, which would be the green. That would be the most easiest way to swing trade, but now we're below it, so that's why it's been choppy and difficult. Let me go back to the daily here so we could see it's in red. It's below the 50. Now I also have the RSI 5, which I like to use for my swing trading to look for entries and exits here. And again, anything below 50 is a good candidate for a pullback, and which we have right over here below the 50 right now. It's reading 22, and what I also see is I see a divergence forming. Let me pull this up here if I can so we could see this better. You can see price action has been going down. Let me put a trend line, little trend line here show, so you can see the price action's falling. Meanwhile, the RSI has not been falling. Actually, it's going up higher. So you got a divergence form in here, and so that means there's a potential bounce possibly coming soon and to go up higher. So I'm a little on the assertive side. I am going to look for possibly looking to go long tomorrow intraday, providing that we have a positive morning. The green candle forming probably on the first 1 hour. If I see that, then I will look to go long and put a stop down here below this wick here. Now the question is, okay, where is our price target? The easiest way to do it here are two ways. One, you could use the VWAP, and this would measure where the majority of the buyers and sellers are. If this one's a little on the higher side, this is where we may be targeting to get to, right in this area here. And then another area also that some people use is the Fibonacci, and if you measure from the peak to the bottom of the current dip, and on the settings, just keep the setting 50 and 61.8 turned on. This forms what you call the golden pocket, where there's a high probability that the may get the bounce into this area. And if you look at it, you got the VWAP in this area, and you also got the trend lines forming in this area here. So there's a good opportunity that we will get to this area, and depending if we can close above it, then we could then see to the next high up in this area. However, if we start showing weakness, then we may be looking for the next leg down, and this is where I will be shifting and looking to get into leverage short ETFs going down in this area. But we'll wait and see how this plays out. But this is how you could determine all that. Now going to the Qs, you could see the same thing, and it's red here on the RSI 14. We got the divergence if you look at it here with the price action going down and RSI going higher. We got nice volume. We have the doji. We have the VWAP right in this area along with the 1520 and the golden pocket here. So there's a good likely chance we'll get a bounce over here if we do get the bounce. And then looking at IWM, pretty much the same story. Weakness on the RSI 14, the RSI 5, we got a divergence, price action going down, RSI 5 going up, nice volume. We got the doji. Now in this case here we're below the 200-day moving average, so mostly in this case here we're going to look for the bounce back to the 200, and then this is where we're going to have to watch very carefully. Chances are it might start reversing and try to head lower on this. One thing I want to bring to your attention, we have a head and shoulder pattern here. You can see here you got your shoulder, your head, and the shoulder. If you draw the neckline right through here, we have a breakdown right in this area. You could, since we will consider this whole thing the shoulder, and if this is the breakdown, we get a measured move of let me bring this down here a little lower. Let's get this in view. Okay, to get the measured move, you go to the top of where the head is, down to the neckline. You grab that, you grab the measured move where the breakout is. So we got the breakout right on this one here. And this is our measured move here. This is the potential where we may get a bounce to the top and then head down lower on the IWM. So there's potentially a lot more weakness on the IWM. So if that's the case, that may bring the market also down. Continue on. So this may be a dead cat bounce that we're coming into. So just be careful. Trade very lightly and very defensively. All right. Hope that helps, and take care and good luck.